To be discussing another indicator called the head and shoulders indicator, and also its counterpart, the inverse head and shoulders. But before we get into that, what I want you to do is just load up an indicator that we're going to use when trading this pattern. So the indicator that you need is Bollinger Bands. So I'm going to do this at the same time. So in terms of setting, if you just make sure that your period is set at 20, your deviations are set at 2, and that you apply Bollinger Bands to a close, and then click OK. Right, now that the Bollinger Bands are on your chart, loaded onto your chart, we can go into the actual formation of this pattern. The first thing you need to bear in mind when trading the head and shoulders pattern is that it's a reversal pattern for an uptrend. So it appears at the top of an uptrend only, with the notion that you're looking to trade in the downwards direction once the pattern is formed. So logically, what you're looking for the market to have, I'm just going to expand that a little bit. What you're looking for the market to have prior to the pattern formation is an uptrend, which I've represented with this line here, okay? Or we'll go down here that represents all of these candles on the left hand side. But we're just going to leave it there for now. If, for example, you have a downtrend and then the head and shoulders appears, it doesn't count. You can't have a head and shoulders at the bottom of a downtrend. In fact, that's the inverse head and shoulders, which we're going to discuss later on. So that's the uptrend, which I'm going to confirm with this line here. The main characteristics of the head and shoulders pattern is that it comprises of 3 peaks. Peak number 1 there, peak number 2, and peak number 3. Those 3 peaks include 1 head, which is in the center, and 2 shoulders, which is 1 on each side. Okay. The head itself has to be the highest peak, and the 2 shoulders have to be below it. In terms of the levels of the left shoulder and the right shoulder, where they are in comparison to each other only is irrelevant. It doesn't count. The only thing you need to bear in mind is that you've got a shoulder on the left hand side, head which is the highest peak, and a right shoulder which is a lower than the head in the center. Okay. So that's your head and shoulders. Now, the reason why we asked you to include Bollinger Bands is because it's a very good indicator, or even a confirmer, that the head and shoulders is likely to be formed and is very tradable, in fact. So, and what we mean by that is that if you look at the top Bollinger Band there, which is this line going all the way across here, you can see that the first shoulder is formed and rejected by the Bollinger Band, okay, just here, and then the trend goes down, it reverses it back in the upwards directions to form the head, and it's also rejected by the top Bollinger Band. Then it goes back up again, and the third peak, which is the second shoulder, is also rejected by the Bollinger Bands, and at that point it goes downwards. So these 3 rejections by Bollinger Bands, and at the same time they're also starting to form a head and shoulders pattern, really tells us that this particular pattern, or this time in the market, is very unlikely that it's going to continue going in an upwards direction. So we start forming this head and shoulders pattern. So, excuse me. So the only other thing you need to do is draw something called a neckline. Now the neckline is basically a line that connects the 2 troughs formed in the head and shoulders pattern, and that trough is there, and the second one is there. All they really are the points in between. So the first trough is really the lowest point in between the first shoulder and the head, and the second trough is the lowest point between the head and the third shoulder. Really, that's it. So we're just going to draw them up. So the first trough is here, and the second trough is there. So I'm just going to extend it. So trough number 1, trough number 2, connected by a neckline. So I'm just going to confirm that line there. Great, okay. So now we've got a head and shoulders line going up, first shoulder formed, there, line going down, head starts to form, going back up, and then the second shoulder is formed. So in terms of trading it, what you're looking for is a close below that neckline, okay? So once you get the close, you start trading. So in terms of, we're going to take this step by step. So the first thing we're going to do is devise a profit target. So I'm just going to grab my cursor, go slightly inside the neckline, measure it all the way up to the head, which is the highest peak, which is in fact slightly beneath. So we've got 143, which is just over 14 pips. Remember, we're using a five decimal broker here. So yes, 143. We go down here, measure 143, and that is 30686. So 686. So that's our profit target, and your stop loss is simply a few pips above the second shoulder. Okay, which is round about there, right? So as you can see in this pattern, if we're looking to play a close underneath that neckline, you can see that the candle is closed all the way down here. Well, I'm not going to trade that because it's too late, right? By the time I get into this trade, my opportunity really is gone. So what I do, or what our traders do, we go into lower time frames. So if we're in a 5-minute chart, obviously the lowest time frame we can go to is the 1-minute chart. So we're looking for a close in the 1-minute chart below that neckline, and you can see that right there. We've got a doji line there that gapped from this candle there, and it closed just beneath that neckline. Okay, and that's where we get into that trade. Okay, it's a little bit below the neckline, but you've got 13, 14 odd pips to trade, and that's enough. So it's really well worth getting to that trade. So and at the end of the day, it saves you it gives you an opportunity to actually trade rather than wait until the 5-minute chart closes. By which in this particular example, at that point it's too late. You can't get into that trade. So yes, remember, you're looking for a close either in the chart in the time frame that you're currently trading in, or a lower time frame, which in this particular example is M1. As soon as you get a close, start trading in a downwards direction. And as you can see here, within literally on the 3rd minute, you've made your target. Okay, and that was a very good trade. So let's look at the inverse head and shoulders. Let's go to another time frame. So let's have a look. Yeah, there's one there. Suppose we can look at that one. Let's see if we go even back further. There's also another one there. I'm looking for one that does. Perfect. Here we go. So what we've got here is an inverse head and shoulders. So we've got the first shoulder formed there. Okay. The second shoulder is formed there, and the third shoulder is formed here. Now, the reason why I've chosen this one, in fact, we've got another head and shoulders there, you can see, but the reason why I've chosen this one is because the second shoulder doesn't touch the Bollinger Band. Okay, so I'm just going to draw that out for you. So you've got a downtrend, you've got an uptrend, then we've got a reversal back downwards. So the first shoulder is now formed here. Oops, the first shoulder is formed there. Then we've got, shut that down, then his head's now starting to form from here. Yep, and then we've got the second shoulder on the right hand side, and then the trade goes upwards. Okay, now as you can see here, the second shoulder doesn't connect, is not rejected by the bottom Bollinger Band. The first shoulder is here, the head definitely is, and then the second shoulder isn't. And remember, you can actually trade those, but just remember that if you're going to trade it that way, that you're looking for a curl at the bottom Bollinger Band here, or the top one. Obviously the top one is now still going downwards, but the bottom one is starting to curl slightly. So this is a great opportunity for you to trade. So if we do the same, connect the two peaks this time, remember, because you're trading an inverse pattern. That goes down there. So what you would do is get into this trade. I'm just going to take this a little bit upwards. I haven't formed these right. Okay, you're looking to get into a trade there. Now let's just say that we're not looking into lower time frames. We would get into this trade round about there, okay, at this candle, at the close of this candle, at the close of this candle there. So what we're looking for is to measure the target is go slightly inside the neckline, measure all the way down to the head. 333 is 1.28655. 28655. Okay, and that's our profit target. Okay, you can remember, you can always look into lower time frames to trade this particular area there, but if we're not, we've still got you know, 22 or 23 pips to trade, and that's a big target, you know. So if your stop loss is just underneath that shoulder, second shoulder there, you know, that's a very good trade. In terms of risk reward ratio, you're looking at kind of 1-to-1 anyway. So just make sure that you manage your trade properly, that you're looking at this pattern accordingly, and if you follow these instructions, you will be able to trade the head and shoulders and the inverse head and shoulders. But as we say, just please remember, if the third shoulder doesn't hit the bottom Bollinger Band in inverse head and shoulders, or obviously in the head and shoulders, we're talking about the top Bollinger Band, just remember that the Bollinger Band needs to curve, as it does there, and that's exactly what it does. By the time that it breaks this neckline, it's already starting to curve, and you're very safe to get into that trade and start making your profit. Okay, so that completes our video, and we shall see you for the next video.